I would say like if there's any particular thing that you can do at that moment when you're trying to make that decision is to maybe, first of all, talk it over with other people, talk about the day to day of what that decision would entail. And sometimes other people can see you better than you see yourself. That's one piece of advice. And it has to be people that you trust who will say things that you might not want to hear. And I think the other thing is to like really just spend a lot of time visualizing what that life is going to be like. Maybe like startup job that you're considering or the corporate job that you're considering. Think about what that life would be like. Waking up, going to work, doing the work, getting that paycheck. When you get that shiny object that you're seeking, like how are you going to feel? How long is it going to take to get there? Because sometimes the length of time it takes to get there is just really long, right?
Welcome to The Wild Show with your hosts, Will Chang, Lee Chang, and Andrew Su. Hi, this is Will Chang, and as always, I have my co-hosts Lee Chang and Andrew Su with me.
Hey, good to be here.
Today, we are joined by our friend, Geo Chen. Geo is the author of Fidenza Macro, a newsletter that provides valuable resources and insights to global macro traders who are looking to improve their skills. Fidenza Macro has over 3,000 subscribers, and I personally paid $300 for an annual subscription. Geo currently manages his family office where he invests in financial markets, venture capital, and private equity, and uses the profits to support causes in climate change, nature conservation, and refugee aid. Prior to running his family fund, Geo was a forex trading desk head with over 20 years of experience at global investment banks. Welcome, Geo.
Hey guys, great to be here.
So what is Fidenza Macro?
Yeah, so Fidenza Macro is a blog that I started a couple of years ago. And I basically talk about my views on global macro and try to give some tips and advice on trading in general, on the art and craft of trading. And I try to give readers a look into the mind of professional trader and let them see like what's the process behind going from an idea to actually clicking the button on a trade.
Can you explain for the audience what global macro is?
Yeah, global macro is a type of strategy and also it encompasses a lot of asset classes from equities to global stocks, from global stocks to bonds, FX and commodities. And it's a strategy where trading all these different asset classes against each other based on what's going on in geopolitics, in global economies, and just all these individual markets in general. So it's pretty much the widest, I guess, strategy in terms of the asset classes it covers.
Okay, so before we get into actually how you started Fidenza Macro, I'd actually really love to hear your origin story. How did you get started trading in the first place?
Yeah, so back in college was when I first learned about the career of trading. I read Jack Schwager's Market Wizards book, and right away, that type of career appealed to me. I think one of the reasons that it appealed to me was because like I was kind of rebellious growing up. I didn't really respect authority figures that much. So I wanted a career that allowed me to be independent and not have to rely on any company or authority figure to determine my fate. I didn't want a career where I had to climb the corporate ladder for years and years. And obviously traders, when successful can make a lot of money. So that was really appealing too. So I became determined to get a trading job out of college and finally landed one at the Royal Bank of Scotland, worked in London for a little bit. And that turned out to be a great training ground for traders. This kind of training doesn't really exist anymore because traders don't get hired that much in, coming out of college. So there I was on the London trading floor in a pit with like 20 plus traders, learning from all of them. And then I moved to New York and started taking risk. And every year I would make a little bit more at a time. And I realized I was pretty good at it. And I started to just keep improving my performance every year and aspire to become truly a great trader. And I hope someday that I could be like as successful as some of the guys I read about in Market Wizards.
Okay, so I think maybe to get started, I feel like we should just go. You write a lot about a lot of different things in Fidenza Macro. One of the things that you write about is your greatest trade. What is your greatest trade?
Yeah, so the greatest trade that I wrote about was back in COVID, March 2020. And so as we all remember, like equity markets started to really sell off And basically financial markets blew up for a whole month when COVID was going around the world. But COVID actually started in December in China, and I've been following it. And by January, it had started to spread around the world. And I realized that what happened to China in January when they had to lock down the whole economy, that was going to happen everywhere, all around the world. And I was tracking the virus numbers just growing in each country day by day. And all this time, the equity markets in the US were just kind of chugging along, really ignoring this. Some people were saying, oh, this is just going to be like SARS or whatever. But I knew that based on the incubation period and how fast it was spreading, that it was not going to be like SARS. It's going to be a lot worse. So in Jan, I started to, put on trades in the bond markets, betting on the Fed cutting from 1.5 to 0 in a very short amount of time, and started to get short equities. And it's very cheap to put those bets on in large size, in the sense that I could risk just a medium size, but take on really large exposure. So obviously we all know what happened. Like the Fed had to cut from 1.5 to 0 within the space of a month. And that ended up being a huge trade for me, and kind of changed a lot for me because it allowed me to open up my family office. It allowed me to take some of those profits and start the foundation, and kind of set me off on a higher trajectory.
So you spent 20 years at an investment bank, and after that trade, you started your own family office. Could you just go into a little bit about maybe the logistics of what it requires to becoming an independent trader and starting your own family office? Like, what are the maybe capital requirements, or what exactly allows you to do that?
Yeah, so I was working at the Royal Bank of Scotland back in 2011, and then I moved on to Credit Suisse the next year. But around that time, I had started a small trading account with $50,000. And at the time, I had started this trading account because I wanted to put on this hedge against global catastrophe. I wanted to go long gold and short the S&P 500. In those days, like, you could kind of trade futures on the side while working at the bank. And that was allowed because these were not products that I was covering at the bank. So that ended up working really well. Like, I ended up multiplying my account by a lot. And after that, I started to continue trading and just kept compounding that capital. So actually, when I left the bank in 2017, it was really because I've compounded my capital in the trading account by so much that the daily P&L swings were more than my annual salary. So it just became kind of a no-brainer for me to just leave and do this full time, not just from a lifestyle perspective, but I wanted to put myself like 100% into trading my own capital in all the markets outside of FX, interest rates, equities, commodities, and basically just tailor my life, my schedule around trading my own capital instead of having to clock in at work at 6 a.m. and then clock out and stuff like that.
How did it change for you when you had to start risking your own money and no longer having that salary or stable income? Like, how did that process and transition change for you?
Yeah, it was pretty smooth transition, I would say, like, because I was already putting my own money at risk, but it was money that I had built up in this account for a long time. I would say I took some money out, put it aside, like, let's say for a long-term portfolio, and just made some small tweaks like that. And in terms of lifestyle, like, I went out and got an office and, was more thoughtful about like how to structure my day. I had to go out and find my own research and actually pay for it. So I had to think about like, how much do I want to spend on research? What research providers are good bang for the buck? I had to start paying for my own Bloomberg, which at the time was like $2,200 a month. Now it's even more expensive. Yeah. So I just had to treat it as a real business, right? With investment expenses, an office and all that.
Let's talk about Fidenza Macro. How did you get started with Fidenza Macro?
Yeah. So I started about 2 years ago, more as an experiment. I'd been thinking about writing for a while, and I was a writer in high school, and even throughout my career, I was writing market commentary for clients. So it was something that I was pretty familiar with. And I read a lot of financial content out there, and I'm kind of dissatisfied with a lot of it. Like, a lot of the stuff out there is people who don't really know what they're talking about, making like bold calls on the market, but then they don't really follow up on how those calls went, Or even how do they express those calls? How does one profit from those predictions in the market? So I thought that there would be like some good demand for content that where views are actionable, where they know like how this trader is expressing their views on the market via trades. And then it just kind of went down the logical path of, okay, well, if I'm talking about my views and then I'm talking about what trades I'm putting on, then I need to talk about where I'm getting in and getting out, because doesn't feel authentic for me to be like, hey, I went long oil today and then, it doesn't go my ways and I just don't write about it again. Right. I felt like in order to be truly authentic, I would need to follow up on that. So that kind of where things went from there.
Yeah, so I'm a subscriber. I don't really know anything about trading, but I really appreciate what you do because I listen to podcasts all the time and I listen to news and the narratives always change. And a lot of times you realize these people that are just talking, you trust them and you end up realizing they're just talking their book, right? And it's really hard to trust what's happening because everything continues to change. And I think when I read your content, I start to understand the world better. And then also, I understand that what you're saying is not really trying to bias anybody towards one thing or the other because you're putting your actual trades on. So you're actually seeing what's happening and you're taking accountability because you're literally like, okay, I did this and it was wrong and I lost money here. And yeah, I just wanted to say it's pretty amazing. Just it's helped me understand the world better, especially because you're taking in all these inputs across everything. It's like, it's so insane how much inputs you have. And yeah, so the way they explain everything, the way that your trades are public has really helped me. Do you feel like, I guess I would love to talk a little bit more about having your trades public and that psychology. What does it feel like to basically be predicting markets, putting down your trades, and then coming back to the audience saying, okay, this is what happened?
Yeah. So when I made that final decision, as I said, I was going down the path of like, how do I provide the most authentic value to my readers, right? And when it came to that final destination, all right, well, these trades have to be public. They have to be time stamped in real time. Then it was kind of scary, right? Because I was like, well, what if I lose on 5 trades in a row and my readers are just like shitting on me in the comments section? And at the time I was having a tough year. Like I think overall for a good 6 months, I wasn't making money. So I was wondering, what if this keeps going? Like, what if I keep, struggling here? Then these trades that I'm writing are just going to be like unprofitable. But thankfully that wasn't the case. This has been a good year so far. So it was scary, but ultimately I decided that even if I lose money, this would be a good experience for readers. Because first of all, I think when I read about other writers, like for example, Brett Donnelly, and they put on a trade, they swing and they miss, I don't feel any animosity towards them. I actually appreciate the honesty. And I'm looking for readers who appreciate that. I know those readers are out there. So yeah, I think people just appreciate content where the reader is just putting themselves out there.
Another decision you made isn't a lot of people probably could do the public trades, posting the trades publicly, but another decision that you made was not being anonymous, right? And actually putting your face out there. I was talking to a friend of mine and I was talking about Fidenza Macro and I said your name, Geo Chen. He's like, oh, actually, I know him because he's on Real Vision. And he remembered the episode that you were on. And he was like, yeah, he was talking about how China was oversold, right? And so I actually think it's quite incredible too that you've chosen to do this publicly and have your face be public too. How does that feel to have a public persona where you have an audience that knows who you actually are?
Yeah, I think my only concern would have been around privacy, but the cases where like privacy becomes a problem, where me being public becomes a problem, I mean, those are kind of edge cases. So I kind of just like brush that to the side of my mind. And overall, it's a lot easier to just be public and not have to take all these measures to hide who I am. Like I could show up on a video, right? And not have to figure out a way to hide my face. And the thing is, a lot of people who try to stay private and behind like a pseudonym or whatever, they end up getting doxxed at some point. If they become famous, they get doxxed. Yeah, I figured just being public was the way to go. There's no need to have a pseudonym or anything. I understand the reasons why people would be private, especially if they're writing pretty controversial stuff or pretty political stuff. But I'm just pretty much writing about what I do every day. Hopefully that's not controversial or anything.
And another thing too that I really respect is the consistency. right? And so you're doing it really frequently. You put your name and your face out there and you're making these trades and then you're writing on a very frequent basis. How do you stay so consistent?
Yeah, fortunately, I realized after I started writing that I actually enjoy it. So it's a good part of my process, actually, just like writing my thoughts out. If I put my thoughts out on paper and it sounds like a cohesive argument, then that means that I know I'm on the right track. There have been times when I've tried to like force a view, or maybe like my own view wasn't quite thought out and I was trying to put it on paper, but it just didn't work. And it turns out that was a sign that maybe my view was wrong. So it's actually additive to my process. And sometimes on a week when I'm just kind of busy and I don't really feel like writing, but I'll force myself to write something just because it's good for me. It's a part of my process that I think is making me more profitable. And if I put on a trade where like I can't justify this trade to my readers, then it's probably not a good trade.
How did you build your audience? You have 3,000 subscribers today. The annual subscriptions actually, it's not cheap. How are you able to build an audience?
Yeah, I was asking myself the same question when I started too. I got pretty lucky early on. Within 6 months, like Arthur Hayes kind of linked to my blog. I had written about liquidity and stuff. So he had linked to my blog and that brought me a whole bunch of subscribers, like 500 subscribers. So that kind of gave me the critical mass where it started to spread by word of mouth, especially in the crypto community. So I have a lot of crypto followers who want to know more about trading and more about macro. Like they probably already have a lot of crypto content, right? But they're looking for stuff outside of crypto. And then I got connected with Rob Powell at Real Vision. So he put me in touch with their daily briefing and their other content interviewers. So that's how I got on Real Vision. So now like I contribute to Real Vision's daily briefing, get on a video every few months, which actually take place at like 4 a.m. in the morning. So it's not something I can do too often. But yeah, so between those two, like those have been really good drivers. But what surprised me the most was the Substack network. Like Substack actually does a really good job of driving eyeballs to my blog because I look at like the sources of where a lot of my subscribers are coming from, and they're just coming from the Substack network. Like they're readers of other blogs or they see my notes, and writers on Substack can recommend each other. So that's been a really good source, which I didn't expect.
And these are serious names: Arthur Hayes, Raw Paul, people that are highly respected in the industry, and they seem to really validate and respect you. So on the topic of trading, like why do you think you're so respected? Why are you a good trader?
First of all, the reason I have confidence to write what I write is because I've been doing this for like 2.5 decades. And I actually make money on most years, and I'm doing this with my own capital. I'm putting my own capital at risk. I know very few people doing this. Like me and one other guy who lives in the US, we talk to each other and we're like, yeah, we don't really know anyone else who is trading their own capital full time for an extended period of time. Like some people do this for a short amount and then they kind of move on. But like him and I were like looking at each other. We're like, we're doing this as a career. Very few people are doing this. So because of that, I think for a unique perspective. So I'm not going to shy away from like writing about that. What makes me a good trader, I think it does come a lot from experience. I feel like I wasn't confident enough to trade my own capital until I had been trading for at least 8+ years. And now we're coming up to almost 25. So there's that. But also, like if I compare myself to other traders I've worked with, I'm constantly learning new markets, new strategies. I'm always adapting and learning. For example, when I left trading FX, even before that, when I got to Credit Suisse, I was only an FX trader. And then I basically got promoted to the head of the spot and forwards desk. So then I got a mandate to trade short-term interest rates. So I learned as much as possible from the guys who were trading on my desk about the interest rate market. And that ended up being an even more profitable market for me than FX. And then when I left the bank, I started trading commodities, gold, oil, and it took maybe 1 or 2 years of making money, losing money, but finally I got the hang of it. And now I would say I'm profitable trading commodities in general, and then moved into crypto as well, added that to my list of assets. So I'm always just trying to find ways to make new money, new asset classes. Also, I think in general, my personality is naturally suited for trading. I think I was born somewhat even keeled. Like I don't have big emotional swings. So I think that I don't suffer from a lot of the emotional pitfalls that other people might suffer from. And during my career, I've actually built a tolerance for market-related stress. I've learned how to make decisions under market-related stress and just deal with stress from the markets. I mean, it's never perfect, right? Like every once in a while, go through a bad run. Like, to be honest, I feel a little bit depressed, but I push through it. I get through it. I have ways to cope and come out on the other side. There are other ways that I've trained my mind to be more resilient. So when I traded at a bank, our time horizon was very short term, maybe a few days at most. But I realized that's not a very good time horizon to be trading in because I'm competing with huge pools of capital, that hedge funds and systematic funds in that time horizon, trying to figure out like, where's the market going to go in the next like 8 to 48 hours. So I realized that I'd have to start trading on a longer time horizon. So I started to force myself to hold trades for longer. And it was hard at first. Like the mind kind of rebels when you try to do this. It tells you, oh, just take profits here. You've already made a little bit of money, or this trade's not going to work out. Just like stop out now. I forced myself to trade for longer. And I also built a mental capacity to maintain more open positions. Like for example, when trading at a bank, I would only really be able to hold like 2 to 4 positions at a time. And, I was told like, don't hold too many positions. This is going to like, when you hold too many positions, it's a distraction. You can't keep track of so many markets in your head. But I believed that it was possible to have a lot of different views, more positions, hopefully non-correlated with each other. So I started to just force myself to just like pile on more positions. And yeah, there were times when it didn't work out at first. I'd lose track of one position. I just would not be following that market as closely and I'd get whacked in that market. But over time, I've learned to just like train my mind to have more positions in different markets. So those are some examples of how things I've done to improve as a trader. I'd say there's other stuff like journaling and improving processes over like many years of trading, learning from mistakes and figuring out how to fix those mistakes and keep them from happening in a systematic way, right? That's also helped me as well. But ultimately, it comes down to the fact that over time, I realized that in my early years, when I compounded like a 50K account to millions of dollars, I was taking some ridiculous risks. I was risking 5%, 10% of my capital, and it worked out for me, right? But I realized that if I kept taking that kind of risk going forward, I'd probably blow up at some point. So that's how I realized this and started to dial it down a lot and started to solve for like survival, for risk management. I knew I wanted to be in this game for the long run. So far that's worked out. Like I think a trader can survive for a long time and have a long career and also enjoy it and make money. Then mathematically, that trader is going to be successful. That trader will have a long, excellent track record, would have made a lot of money just by surviving for that long. That's what I'm hoping to do.
Yeah. I'm curious. So you're talking about all the learning you were doing. What's your process like to learn a new market and also update your system?
Yeah. So to learn a new market. So let's say, for example, like oil. Oil is a market that is pretty tangential to everything else. It doesn't trade as closely to like interest rates and FX. So that was probably the newest market that I had to learn. So I started to subscribe more to like energy research, listening to energy related podcasts and just like trying to absorb more content around energy. And that came with like all the different areas of the energy market, like distillates, diesel, like gasoline, natural gas, learning about where supply comes from, US shale, Middle East, Russia, the flows of energy all around the world. So it took a while to build this mental model of what drives oil. Ultimately, the key is to build that mental model. Like what is driving this price? Is it supply? Is it demand? Sometimes it's both. Is it geopolitics? What drives it at any point can change. But I feel like for any market, there are only really 2 to 3 drivers at any given time. So it's figuring out what is driving that market at that particular moment. So, it took a while for me to figure out. I would say like where I started to get a lot more confident in trading oil was probably during 2020 when oil started crashing. I was short oil as well and made a lot of money from that trade. And then made some money when it started to shoot back up too. So, it's definitely like a trending market. And because it's not always trading in lockstep with equities or interest rates, it makes for nice non-correlated assets to trade.
It makes sense that you're studying all these different facets and connecting it to your past experience on understanding kind of the main drivers. How do you actually test the model you're building in your head? For example, is it only through trades? And so you're tracking your trades and you're actually writing down your hypotheses and then seeing how it performed? Or are you building a model? Do you have a typical method on how you're actually like testing your model and confirming your belief of what the drivers are?
Yeah. So this mental model I'm talking about is kind of like, even if I don't have a trade on in that market, and it is, I can't just put on a trade every time I think like, oh, maybe, I want to try out this thesis, because I'd probably lose a lot of money that way. But I'm looking at the market every day, and this applies not just to oil, but every market. And I think about what has happened and what my view is and what my expectations are for that market to do. And this, like, I'm kind of just doing subconsciously, actually, without realizing it. But as I'm looking at like charts and looking at prices, I'll have these expectations of like, all right, like, this happened today. I would think oil it should be lower, but it's not. Or this market like had a weird move that I didn't expect. So what this does is it sets off alarm bells and in my head, and it updates my mental model in the sense that, okay, if this market moved in this way that I didn't expect, then that's like an input to how I think this market is evolving or changing. Two things could happen from there. It can continue to move in this way that I didn't expect. For example, let's say oil is going down and copper is going up. Usually those are both like tied to global economic growth. So, I started to think, okay, something is off here. Which one is wrong? So I either look for something to converge, like for those relationships to reestablish themselves and to converge, or it tells me that maybe this divergence is a sign that one market is changing its regime. And by regime, I mean the drivers are changing positioning, and the market players are changing their position in a way that's not like obvious to the rest of the market.
That actually makes sense. So, right, you're kind of mentally constantly testing your expectations and seeing if it makes sense. And then you're noticing when something is off. And so you're kind of digging into it and looking. You would then confirm if the divergence, like you're seeing something where you can estimate that it'll correct, let's say. I would assume that at that point, that's when you make a bet. So at that point, how do you decide the size of your bet? Because I think this very much also overlaps with what you were talking about with how you've changed your position size, where it used to be 5 to 10%, and now it's more of a survival percentage, which I have no idea what that is. But so you've noticed an opportunity. I assume you're going to test it in certain scenarios. How do you decide on the bet and the size of the bet that you then make in that opportunity?
Yeah. So to start off with, like whenever I put on a trade, I always know where I'm going to cut the trade if it doesn't work out. So that's where my stop loss is. So the distance from where I enter to the stop loss will be like how much, I'm risking in terms of like, the market distance. And then I'll size it so that I'm risking, let's say like 1% of my trading capital. That would be like a standard size for me, like 1% of my trading capital. And depending on certain factors, if I'm having a bad run or if I feel like really strongly about the trade, I might dial it down or up. So I have a system for that. If I'm going through a drawdown of 5 or 10%, I'll dial that number down on these new trades as well. But that 1% rule in general is what I find to be a good balance, because things would have to go pretty wrong for me to draw down 25%. Because if I'm drawing down to 5%, I'll dial down my risk a little bit. And then 10%, I'll dial it down even more. So things would have to go pretty wrong for me to be down like 25% for my high water mark. On the upside, like I can still make a lot of money risking this amount. Like in 2020, I made like over 200% risking that amount. So if things go really well, I can still make a lot of money. So I think it's a good balance, basically. I don't want to risk more. Like I don't want to ever draw down 50% because you have to make 100% back just to break even.
I mean, the way they explain oil, every market seems like it's really complex. There's a lot of inputs and it has its own nuances that you have to know. You said that most traders have 4 open positions. I went to your trading positions and I saw one where you had like 7 or 8 positions open up at the same time, right? And so I'm just curious, because you said you trained yourself to have more open positions. I'm just curious, how do you keep each of these markets in your head, and how can you keep track of what the inputs are? And yeah, it just sounds just so overwhelming.
Yeah. So a lot of it is risk management, so having stops in place that will automatically trigger if it goes against me. So that's the first line of defense. So if something happens in the middle of the night and I'm asleep, I know that my downside on each trade is somewhat defined. And, every day is a process of just like reading what's going on in those markets and seeing if anything has changed, anything that would change my mental model of that market. A lot of times it's like a few things that are affecting all my positions, like what the Fed has said the previous day will change what's happening in equities, FX, and interest rates all at once. So, I just need to keep track of that sometimes. Keeping track of what regime we're in. So by regime, it's kind of like what I mean is what the market is focusing on and how the different markets are trading with each other at the same time. So when I talk about a stagflation regime, which is the regime that we spent a lot of time in over the past couple of years, it's when risky assets and like stocks go down along with bonds because the market is worried about inflation or worried about the Fed being too tight. And then you have like the disinflation regime, which is the opposite of that, like when stocks and bonds go up at the same time because the market is becoming less worried about inflation, like asset allocations like risk parity, long equities and bonds at the same time, like those tend to do well. So there are actually like four main regimes that I follow. The other one's recession, which is what happened in March 2020 when bonds are going up as a safe haven and stocks are going down. So that's kind of like a classic risk off regime, similar to financial crisis 2008 as well. And then there's like a reflation regime, which we saw a little bit of this year, where bonds are going down and equities and other assets are going up because like the market is booming and growth and inflation are going higher. So these like four different regimes, and they're actually like kind of a quadrant. If you map out growth, like expectations of growth on one axis, inflation on another axis, they end up in like four different quadrants. So that actually fits into my mental map. It's important to know like which quadrant we're in at any point in time.
So you're kind of calculating, well, yeah, I'm actually curious. So, you calculate, your max downside, and then you're estimating an upside, and you're looking at the regime. Is that boiled down to like risk reward on the position? Sorry, I'm like not fully versed in trading. So like, is that kind of what you're thinking about when you're looking at that? You set your stop loss, you have estimated upside plus the regime. Is there a specific way that you then are calculating or thinking about a position, or you just know what's good and bad in terms of that ratio?
Yeah. So risk reward on any given trade is always a factor. If I'm risking, let's say, for example, 1% on a position at the outset, then I want to be able to make like at least 3 or more, maybe 5 to 10x that if things go well. It doesn't always work out that way. I might get to like 2x or 3x and then the market might reverse, or I trail my stock like as it goes in my favor. So I trail my stock closer to the market. And sometimes those trailing stocks get hit. So maybe I'll only make like 1 or 2x. But that's what I look for. Asymmetric opportunities. Like looking for asymmetric opportunities is actually like one of the biggest things in global macro, where you can just make a lot of money, but without risking very little. And these come in different forms. Like they come in the form of like, let's say options. When you buy a call or put, and you have like a defined downside risk. But if the market goes very quickly in your favor, then that option might be worth like 5, 10x. Or it might come in just like a linear bet with a stop, right? And then it just catches a trend and it goes a really long way. In interest rate markets, like interest rates tend to have certain boundaries. Like for example, Powell said he's not going to hike this year. So you could potentially, for example, put on a trade where if the odds of him hiking are extremely low, but on the other side, the odds of him cutting, 5 or 6 times over the next year are possible, then, that's an example of a symmetric trade.
You talked about how losing money sometimes or market forces caused you to go into depression, but you've developed ways to cope. Can you talk a little bit about those ways that you've developed?
Yeah. So just to be clear, it's not like full-blown depression where I have to go see a psychiatrist or anything, but kind of just like this cloud that hangs over me. Because when I'm going through these periods, and every trader goes through this, it's kind of like, first of all, I probably lost more money than I would like on some trades. And I feel like out of sync with the market because clearly my views didn't pan out. So the market just did not behave according to my expectations. So there are a few things that I need to do in this situation. First of all is to manage my downside risk. So whatever positions are causing me the biggest problems, I need to like figure out a plan, right? So the plan is not necessarily just to like cut the position right away. But sometimes it might just be like, okay, if it goes to this level, I'm going to cut it, or I'm going to like reduce the size and then put a hard stop on it or something like that. Or I'll stop out now, but then I have a plan to like get back in if I turn out to be right and kind of goes back in that direction. So develop a plan for those problem positions. And I dial down the risk on any other new positions. So overall, just want to like stop the bleeding. So those are like the process driven things. And I'll also get like a lot more picky on my trades. Like I try to sit back and not trade as much. And that forces me to be a lot more selective. So in terms of the mental aspects, it's a process of like going through these different emotional stages. So when I first draw down, the first thing that I and most traders feel is denial. In denial that this is happening to me, like this is not what I expected. And the most compelling emotion is to want to make that money back. And this is because the mind is in denial. So they're like, okay, try to figure out ways to make this money back. And this is the most dangerous period because traders can do stupid things to try to make the money back. Just overtrade, they'll double down, and this is not a good place to be. So I try to like just process these emotions and just forget about where my P&L was. Okay, I was at X and now I'm at X minus what I lost. So distance is when you're in denial, that's like always haunting you. So I just try to forget about like that I was ever there, right? And just focus on where I am right now. So I go through that process and then, I do stuff like take walks, hang out with friends, exercise. Actually, exercise is a really important part because, it just kind of gets my brain back into a mode of like being centered, make sure I get good sleep, all this stuff, physical and mental to try to help my mood. And I just try to, get back into sync with the market. Like I talk to other traders, ask them what they think and try to just figure out like, okay, I was wrong, but from here, like, where's the market going to do? From here, what's driving the market? What are the opportunities? Maybe there are no opportunities right now, but I want to be ready for when they come. So one thing I tell myself is like the next great trade is always around the corner because it's true. I'm a trader who always has who has a lot of ideas all the time. I find opportunities everywhere. And even if I don't see any opportunities today, 2 days from now, like I might see a great opportunity. But if I force it today, and if I do something stupid, like I put on a suboptimal trade, I'm just going to lose more money. So I just need to be patient and wait for that next great trade to come because based on experience, it always comes along without fail.
Hey, Geo. Sorry, I jumped in late, but I love this topic right now because the only way I can relate is that I used to play a lot of poker. And maybe in a similar vein, essentially, even if I won $1,000 that day, if I ended at 900, I felt like I lost $100, right? And I would just consume me and I would just feel like crap. And sometimes I know, obviously, that in the grand scheme of things, I'm actually up, but the mental strain of the up and down is actually extremely stressful. I'm curious, like, based on what you said, and sorry, I'm just jumping in like kind of blind, but it sounds like to sustain and to keep doing what you're doing, it's also because you know that you have ideas and you know that you can see the asymmetry, right? Like you're confident that you're able to continue to see where the alpha is.
Yeah.
And thus, like you're confident that in the long run, you're still going to be able to basically see all the opportunities.
Yeah. And also like I've been through many drawdowns before and I've climbed out of them fine. This year, I'm actually coming out of like the biggest drawdown of my career. I'm fine. I survived that. So it's having the confidence of going through this process, just do what I did previous times and I'll be fine.
What about, do you ever get FOMO? Do you ever feel like there's different trades, different new strategies perhaps that you could employ? Or if you, instead of keeping up to the market by reading and staying in touch 4 hours a day, if you did 8, maybe you could double what you make. How do you kind of keep yourself keep your mind at peace and your mind at peace that you're doing what you want to do and you don't have that FOMO or feeling like you're either falling behind or you could be doing more?
Yeah, I guess there's a lot of different kinds of FOMO in the market, right? So what you're talking about is what more could I be doing process-wise or strategy-wise where I could make a lot more money? And, it's a good question. And I mean, I've actually tried a lot of different things in my career. I've tried, for example, selling options and just collecting that premium because like statistically, it makes a lot of money for people. And if they could manage the downside risk. And so when I tried that, I found it didn't work for me. My brain is not suited for being short options. My brain is more suited for paying premium and getting exposure to like asymmetric upside exposure. And I found that with people who trade options, most humans are wired one way or another. So they either have a bias towards option selling and collecting that premium, that regular income, or they're biased to purchasing options and paying premium to get that like outsized return. So I'm the latter. I tried employing like AI strategies to allocate to a long forward strategy in equities. So like using machine learning to rank all the different stocks in the market and going long the highest ranked ones and shorting the lowest ranked ones. And I decided that wasn't for me. It was really boring. And the return or the upside was uncertain. Like just because this machine learning model back tests and says, oh, this strategy made, I don't know, 50% over the past 10 years doesn't mean it's going to make 50% for the next 10 years. So, and sometimes, these models like suddenly break, right? Because the market changes and has really vicious drawdowns. So I've tried a lot of things actually. And ultimately I realized that there's a limit to how drastically I can veer away from what I'm doing now, just because of my personality and how I view the market. And I was like, how I trade now, my time horizon and my style is just like, that's what I enjoy. So like enjoyment is actually quite a large part of it, because at this point in my career, like I don't want to be doing something I don't enjoy, something that's just really tedious. Yeah.
That's actually really interesting because, again, back to the poker analogy, but in poker, ideally you can change gears, right? Like you can adapt to the table or to the player and perhaps be unreadable yourself. But I think that makes sense. That's actually interesting what you said about kind of knowing your strengths or how your brain works, right? And maybe not trying to force yourself to take a different side or take a different strategy that makes you feel uncomfortable or like is just not kind of your game. Has that translated to other aspects of your life? Kind of knowing your personality or just how your brain works and how you've applied that to whether it's personal relationships or like how you spend your time. Have you ever thought about that?
Yeah, it's a good question. Very much so. Man, I don't even know where to start about this. I mean, like, so I realized I've done a lot of thought about what makes me happy and fulfilled, right? So I realized a few years ago that doing things that get me into a flow state makes me happy. So I started taking piano lessons again, and I started to make it a habit to read every day. So those are the two things I try to do every day, like play piano and read. It doesn't take that much time. So I don't regret that. I still enjoy those hobbies. In terms of like priorities in my life, like if things keep going on like this, I started like, investing in all different kinds of stuff like venture capital and all that. And I hired my first employee from the family office, and things were just kind of, I was starting to get spread a little thin. And, then like 2022 happened, right? A lot of stuff went down. And I realized I don't want to be someone whose career it is to be managing all these different assets. I just really enjoy trading, managing that aspect. But like all this other stuff is kind of secondary. And it was frankly just like spreading myself too thin and also detracting from my main thing was that made me all this money, which was trading. So basically I did have FOMO, right? Like I had FOMO on trajectory of what I thought I could build and where I thought I could take it. And at the end of the day, I realized it's not that important to maximize like necessarily how much money or wealth that I'm trying to build, right? I think at the end of the day, it's easy to go down that path. And next thing you know, you have all these obligations and time commitments and things that you need to look after and manage if you end up trying to solve for just more and more wealth and more money. And eventually like that stuff is just going to weigh you down. So I decided to stop solving for that basically.
Can you talk about the Huang Foundation?
Yeah. My wife and I had been really interested in nature conservation for a while, like 2015, 2016, because back then I'd realized that deforestation was one of the biggest problems in the world. It's causing climate change. It's causing loss of biodiversity and it's ruining people's lives as well. So I figured if we could fix that, then a lot of problems in the world could get fixed. So started to donate to Rainforest Trust, which is an NGO that saves rainforests all around the world. And, eventually developed a good relationship with them and then eventually ended up on their board, which I'm still on the board now. And then after that, started to look around at different ways that we can try to help solve the world's problems. So try to support causes that focus on climate change. And then with climate change comes climate refugees as well, which is there's hundreds of millions of climate refugees in the world and not enough money being spent to help them. So that was kind of like a natural progression of the causes that we like to focus on. So I started to think about starting a foundation, and in 2020 had the opportunity to do that. And it was a way to formalize our giving and to just create this lasting like vehicle for us to keep giving, for our kids to give someday. And yeah, so now this is one of the things that drives me as a trader to keep making more money. And so I can continue to fund the foundation and to try to help people and nature and stuff.
You wrote this quote that I'm going to actually read out because I think it's pretty amazing. What made me want to go into trading was the desire to be independent and not have my future and salary be dependent on any company or authority figure. Later in my career, it was a desire to become known as one of the best traders in the world. And now what drives me is to fund these charitable causes via my foundation. So it's pretty cool that now this is your why. And the reason why you trade every day and the reason why you do Fidenza Macro is to basically like a cause bigger than yourself.
Yeah. It's good that I enjoy doing this as well. It's definitely my biggest why for why I keep putting my own capital at risk. Otherwise, I could just like put in a long-term portfolio of, stocks, coal, T-bills, right? And then just cut the coupon for the rest of my life. But yeah, it's just what I enjoy. I think earlier in my career, the part about wanting to become the world's greatest trader or whatever, or that's kind of like more like an ego thing. And I just realized that there's no such thing as the world's greatest trader. I mean, it's really just, everyone's just doing their own thing and they have their own definition of success, right? So it doesn't really exist. This funny thing happened a few years back. I actually talked to Jack Schweiger, the author of Market Wizards, a few years back. And he wasn't really writing a book about traders, but had the opportunity to work with him, maybe like participate in some asset management with him. At the end of the day, for me, it was like, do I want to do this for my ego's sake, to be able to say that I did this? Or do I want to just like keep my life simple and trade my own capital and not have to deal with like the complications of managing other people's money? And at the end of the day, after like kind of searching my soul, I realized that I just want to keep things simple. What I do now is just really as simple as it gets. Like I don't have to deal with investors, shareholders, employers, employees.
You're really generous with us and offered your coach, Claudian Curran, to hold like an informational session. And you've told us that she's helped you a lot in your career. Could you talk a little bit about what you learned from her and how she helped you?
Yeah. So this episode with Jack Schweiger, like that was like, I had been talking with her about that too. So she really helped me find the best way to figure out my priorities and to basically like, she was really helpful in determining what are things or decisions that I'm doing that are driven by ego or FOMO versus the things that make me feel fulfilled and happy. For a lot of people, they don't really know the difference between the two until maybe like after the fact, and after they spent some time, maybe being less happy doing that thing that they thought would make them happy, right? But it turned out that it didn't because they were chasing it for the wrong reasons. So she helped me cut off some of those paths pretty early on.
So for the audience that's listening or for myself, how do I recognize if I'm doing something for my ego versus doing it for fulfillment? And how do I actually make those decisions to cut those things off?
Oh, yeah, that's a good question. I think a lot of it just does come with experience and knowing yourself pretty well. I would say like if there's any particular thing that you can do at that moment when you're trying to make that decision is to maybe, first of all, talk it over with other people, talk about the day-to-day of what that decision would entail. And sometimes other people can see you better than you see yourself. That's one piece of advice. And that has to be people that you trust who will say things that you might not want to hear. And I think the other thing is to like really just spend a lot of time visualizing what that life is going to be like. Maybe like startup job that you're considering or the corporate job that you're considering. Think about what that life would be like, waking up, going to work, doing the work, getting that paycheck. When you get that shiny object that you're seeking, like how are you going to feel? How long is it going to take to get there? Because sometimes the length of time it takes to get there is just really long, right? So yeah, I guess those would be my words of advice.
Have you gotten any shiny objects that have stayed fulfilling?
Yeah, I mean, I think the idea of being like a profitable and successful trader is like a shiny object that a lot of people seek, I think. And for the majority of people, they try and fail. So I'm really lucky to be in this place and to have beaten the odds. I mean, knock on wood, things can go wrong at any moment. Just because I've done well doesn't mean I'll continue to do well. In fact, the moment I start to rest on my laurels and think, oh, I'm an awesome trader, then like that's when I usually lose the most money. But that's pretty much the one shiny object. It's not like, it's just kind of a way of life for me, right? It's not like shiny anymore. It's just part of who I am. The way I look at the world and the way I just look at the market and subconsciously making all these different calculations and stuff. Even the way like I look at stuff outside the market, and I look at it in terms of probabilities, risk reward, inevitabilities. It just colors everything, the way I see life in general. Kind of weird, right? It's like I've become the trader part of me and Geo are kind of just like kind of combined.
Yeah, no, it makes sense. You've tied in parts of what you enjoyed plus your purpose. So it's almost like you're investing in yourself. And yeah, you've tied it together to be the life, the shiny life that you're looking for, right? And you've tied into all the other aspects you care about. So it's really special.
So Andrew's a new father and Geo has two beautiful daughters. So how has fatherhood changed your perspective on life? And how are you, through your own learnings and how you know yourself, your experiences, how is that helping you to instill, and what are you trying to instill, I guess, into your children?
Yeah, that's awesome. Congratulations.
Thank you.
So it was when I had my first child when I really started to give to philanthropy because I didn't want to like leave behind this shitty world with climate change to them. And I'm glad that we started the foundation when we did because and now my kids are old enough to understand climate change and they ask me about it a lot and they seem pretty worried. And I think like it helps to be able to say like, we're trying to do something about it. And it kind of gives us all a sense of agency. At least we're trying to do something to, even though it might just be a drop in the bucket. Like it's not going to make a huge difference in the grand scheme of things, but at least it gives us the feeling that we have agency over our futures. So overall, having kids, what I'm trying to instill in my kids, I want them to just be able to, what I'm trying to instill is one, a sense of curiosity about the world and open-mindedness about the world. Because I think those are things that if you're curious and open-minded, that's going to apply to every aspect of your life and career and take you a lot further. And I think mental flexibility is also important to be able to take new information and to be able to change your mind or even hold two conflicting views or ideas in your mind at the same time. And maybe, believe both of them can be true in different ways. I think that's important. Don't see everything in black and white. There are many shades of gray and be empathetic to other people and understand that there are reasons and drivers for people to do things and for things to happen in the world that sometimes, just kind of lead to inevitable conclusions. And yeah, I mean, on one hand, like we can judge that and say, all right, this is bad, this is good, this is wrong, and this is right. But from the point of view of that person or that group of people, is just like a path that perhaps was inevitable. I think this applies to a lot of things going on in the world at the same time right now.
You got any advice for Andrew? His daughter's only like what, one? Not yet. Is she one yet?
Just over one.
Just over one. Sorry.
Just starting to stand. Yeah.
Any words of advice for her?
Yeah, I would say the most important, be there and give love and always tell your kid that you love him or her. At the same time, don't always be hovering and trying to catch them when they fall, right? Let them do their thing and be independent and learn and make mistakes at the same time. So there's a delicate balance. I've just finished this book by Rob Henderson, he's another Substack writer that I follow. And he has this book called Troubled, a memoir. And it's about him growing up in a bunch of different foster homes and basically having a really troubled childhood. He eventually went on to study at Cambridge and now he's this famous writer. But, a lot of the lessons learned from that book is really the parents' love to their kid is really the most important thing. It matters more than the socioeconomic circumstances the kid grows up in, like how much money or education the kid has. A parent's love and the way they show the love to the kid really is probably the biggest driver for future outcomes and future happiness of that child. And I mean, I think I had always kind of had a feeling that was the case, but this really cemented that idea, right? People focus so much on how affluent a child's family is, or what kind of education that kid has. Like people say, oh, the answer to solving poverty is just to like educate kids better, right? But actually, a lot of it just starts at home.
Yeah, I appreciate you sharing that. And fascinating enough, we actually had a former guest on who went through was in foster care for 20 years and then worked in it. And that was actually his point as well, which is it's actually about community and keeping kids connected within their community, because that kind of creates a foundation that they can grow from in addition to the other pieces. So yeah, no, it really resonated and appreciate you sharing that.
Just going back to trading a little bit, because I almost feel like trading is almost an extreme reflection of just decision making in your life. And you talked about how you created a systematic way to fix your mistakes. So do you mind just going through how do you recognize the mistakes, and then what is the systematic way in which you fix them?
Yeah, it is a very extreme way of getting immediate feedback on your decisions, which I find is pretty awesome. I write a journal. Every time I do a trade, I write in my journal, like where I got in, my stop loss and all these other metrics. I have a drop down menu of like all the typical mistakes that I make. So when getting into a position, putting on too much size, chasing the market, due to FOMO, and sometimes getting out of position, not sticking to my stop, getting too greedy and not being quick enough to take profits. Sometimes that can work both ways, but also like not protecting my profits by shailing my stop. So there are all these mistakes that I've made in the past and, continue to make. Even today, I'm still not perfect. So I, pre-grade the trades on, am I making any mistakes putting this position on? And then after I get out of the trade, I grade the trade based on how many mistakes I made over the course of that trade. And this makes me extremely self-aware of when I'm making a mistake. Like I could detect it right away. So that's one part of the process. And so I think that's a key part of the process, just being more self-aware. Ultimately, it just comes down to like clicking around and adjusting my orders, putting in orders to like protect my downside. Over the years, I guess all the mistakes I've made kind of lead to the same conclusion, which is to have better risk management. So cut my losers where I'm supposed to cut them. And on the winners, just protect those profits in case the market turns. I get out of the trade, hopefully at a gain, but just protect those profits. Don't let like a big winner reverse into a loser, for example, because if I do that, then the winners will take care of themselves, right? I'll hit a few home runs here and there, and those will take care of themselves. But if I have big losers, then that's just going to detract from the performance.
Do you do all this tracking, sounds like in a spreadsheet then, since you were saying you have like drop down menu of all your typical mistakes, then you're doing the grade?
Yeah, it's actually done in the software called edgewonk.com. I discovered it back in 2017. It's a great piece of software. On one hand, it's kind of like just a glorified Excel spreadsheet, but because it just like delivers all the functionality that I need in online software form, I just keep using it. It's really handy.
Is it built specifically for traders, or can you use this applied to like different aspects of your life? Like could be some other discipline.
It is only for traders.
And it's Edgewonk, EDGEWONK.
WONK. Yep.
Cool. Fascinating. Thank you.
So you've obviously created all these systems in place to keep yourself level-headed, to basically good risk management, give yourself a lot of upside, just make really good decisions. So you optimize making money and you cap the losing money. How has that muscle that you built out trading affected your normal life?
So maybe to throw like another thought in there is that, does it make you sometimes too black and white? For example, back to the poker thing, we used to always joke, oh, that's just a big bet, like not a big deal, right? Everything was, oh, it's fine. We'll just make it back on whatever at the tables. But do you feel like sometimes you're either too rational or too risk averse, or maybe kind of if that adds color to the question.
Yeah. I think it might make me a little too rational in everyday life. Or like maybe, I might look at the world in terms of probabilities, which I think is generally a good thing when booking flights, for example. Okay, what's the probability I'm going to like miss this connection? No, let's not have to deal with that. Or maybe this probability is worth it, right? Do I buy insurance or not? Like little things like that. I think what my wife would say is that something's not working out. I might try to cut losses too quickly. I might just throw my hands up and be like, okay, let's just leave it. Yeah, my kid doesn't like this class. She keeps complaining about it. Let's just like pull her out, right? Right. Yeah. That's one area. Yeah. If you ask my wife, she would say that.
I think you were trying to find new avenues, hobbies, interests. And by the way, we should actually, I don't know, Joe, if you have like clips, I saw like an Instagram story you posted of you playing piano. And like that blew my mind because I mean, I guess I figured you probably played when you were young. But I'm like, dude, what else? This guy has like perfect six-pack abs, is a good trader, good guy, also plays piano, amazing. Is there something that you're trying to get better at right now that's taking a lot of your attention or hobbies that you're picking up?
Yeah. Piano, I'm always trying to get better at. I feel like after taking lessons for the past couple of years, I've gotten a lot better. I grew up playing as a kid, and thank you for that compliment, by the way. I grew up as a kid taking lessons until high school, and then I stopped taking lessons and just kind of played for fun for like decades. And I never thought like I'd be able to become better than where I was back then. But I think I'm at that point now. I think at some point I'm trying to become a better writer, not just for the blog, but at some point I want to sit down and write some fiction, actually. So, it might evolve. It might require me to like take a break from trading, but I think it's something that I would enjoy and that I want to do at some point. But it requires me to write more, like to just, get hours in to write. I don't think at the level where I'm at now, I could just sit down and write a nonfiction book, a good nonfiction book.
Where did that interest come from? Fiction is such a different discipline or completely different beast from what you typically do. But yeah, how does that interest come?
Yeah, I don't know. Like, I think I'm naturally a creative person. Like, I've always gravitated towards the arts and music, and my creativity comes out in my trading as well. I think that's where I get a lot of these ideas. So I want to just put something out there that's like just a creation of my own mind. It would be very different from my blog. I think the blog is really just like, okay, what's happening today, right? It's just like water that comes and goes. It's not something that I can create and be like, I created this. But yeah, so there's a couple of ideas that I have. One is to write like some historical fiction around my mother's and my grandmother's escape from Shanghai and moved to Taiwan, and maybe write some historical fiction around that based on those stories of my grandfather as well. There's some pretty interesting stories that came out of that. And I also want to write some science fiction as well, maybe based on, I don't know, like markets.
Four-body problem.
Yeah, four-body problem. Yeah, like markets, time travel, space-time, a lot of these different themes and subjects all wrapped into one. I think it'd just be fun.
I'm going to send you a list of my favorite books on this. I love this kind of stuff.
That's super cool. You should totally do it, Joe. Highly encourage.
Thanks.
What's interesting is when you say that you're going to do it, we all believe you're going to do it. It just seems like you're willing to put in the time to actually complete the result. Yeah, so that's pretty cool.
Yeah, I hope so.
All right, Geo, thank you so much for your time. I really appreciate the generosity you've given us.
Yeah, thanks a lot, guys. Great talking to you, and thanks for all the great questions.
Bye-bye.
Thank you. Yeah,
Take care.
Take care.
Pleasure. Bye.
Thank you so much for listening until the end. If you've enjoyed this episode, please leave us a review on Spotify or Apple Podcasts. It'll help more people like you find us. You can find more about us on wild.show, wld.show. Please subscribe to our newsletter or DM us on Twitter. We'd love to get to know you.